Most of you will be getting more money back this tax season. We are at the end of 2025, and it is that time of year when most Canadians begin to prepare for tax season. A lot of Canadians do not like this time of year because they have to take stock, file their taxes. Some people have to pay back money to the CRA, while others go home happy with their tax refund checks. Everybody wants more money from the government, and everybody hates the idea of paying money back to the government. But allow me be the first person to tell you that for 2025 and 2026, there is actually a lot more for everybody to be excited about, because most of you will be getting more money back this tax season, which is why in this video, I will be covering some of the changes that has been made to our tax advantage accounts, like the tax-free savings account and the RRSP, changes to the CPP, and changes to the basic personal amount. I will also briefly cover the tax rate cut at the federal level and how some people will be losing money because of these rate cuts going forward. Then we will look at changes to the tax brackets at the federal and provincial levels, as well as other minor changes that some people should look out for going forward. We have a lot to cover in this video, so let's dive in. For the TFSA, everybody gets a new $7,000 contribution room for 2026. You don't have to be a permanent resident or a citizen to qualify. There is also no deadline for the TFSA contributions, so any unused contributions you can carry forward to the following year. Use this tax-free savings account calculator to check how much contribution room that you have accumulated so far by just answering a few questions. I will leave the link in the description below. Based on my own information, I have so far accumulated a total of $38,500 in contribution room. I ensure that I continue to max out my tax-free savings account every year, and my tax-free savings account has grown from $38,500 to almost $70,000, just simply because I save and invest in my tax-free savings account. Make sure that you are using your tax-free savings account. Continue to save, invest, and build wealth. This is a tax advantage account that everybody should be using. So if you are not using it, you are losing money. Check out this video if you want to start investing in Canada, and feel free to use my referral link in the description of this video to start your investment journey with either Wealthsimple or Questrade. For the registered retirement savings plan, the maximum contribution limit has gone up. In 2024, this amount was $31,560. In 2025, it will be $32,490, and in 2026, the amount will be $33,810. Remember, this amount is limited to 18% of your earned income. But if 18% of your earned income is more than $32,490 in 2025, you cannot contribute the excess. For example, if you earn $250,000 in 2025, the maximum contribution you can make is $32,490, not $45,000. Only those who earn above $180,500 fall into this category. For everybody else, your maximum contribution limit will be 18% of your earned income. This is one tool that anybody can easily use for both tax and retirement planning, so take advantage of it. Next, we take a look at the Canada Pension Plan, the CPP. The CPP contribution rate remains unchanged at 5.95% for 2025. However, since 2024, we now have two ceilings or two brackets for CPP contribution. Anybody who earns below $74,600 will only make one CPP contribution. And if you earn above $74,600, you will be making a second CPP contribution. For the second CPP contribution, you will have to pay an extra 4% for income between $74,600 and $85,000. That is a maximum of $416 if your annual income is $85,000 and above, or $16 per paycheck. So, not a lot of money. And remember, the more you contribute, the more you get in retirement. If you are self-employed, you will have to contribute double, which will cover both the employer and employee portion. Next, we take a look at the federal tax rate cut of 1%. Effective July 1st, the lowest tax bracket at the federal level will now be taxed at the rate of 14% instead of the old 15%. However, everybody will be getting half the benefit of this rate cut in 2025 and the full 1% cut in 2026, because this is a change that took effect middle of this year, 2025, which means at the federal level, the first tax bracket will now be taxed at a rate of 14.5% for this year of 2025, and then 14% going forward for 2026. For example, if you earn $55,000 in 2025 and 2026, at the new tax rate of 14.5% and then 14% respectively, you will now be saving $275 in 2025 and $550 in 2026. For a two-income family, when this new tax rate takes full effect in 2026, this can easily help you save up to $840 per year in taxes. However, there are situations where some people stand to lose more money as a result of this new tax rate. And this will affect mostly people who have a lot more to claim in non-refundable tax credits, like people claiming the tuition amount or medical expenses. So because the new tax rate is lower, these people will now be getting less in tax credits. But the government has made provisions to ensure that nobody gets to lose money because of this new tax rate by introducing a top-up tax credit, but this will only last until the year 2030. It is also important to remember that if a tax credit is non-refundable, what you do not use in a particular year, you lose forever. You do not get a tax refund for any excess that remains unclaimed. Next, we look at the new tax brackets for 2025 and 2026. Every year, the CRA makes changes to the tax brackets to adjust for inflation. So, the tax brackets have been raised by 2.7% for 2025 and 2% for 2026. And anyone can actually make the argument that these rates do not actually match the rate of inflation or the rising cost of living, and you will not be wrong. Here is a table that shows the tax rates and the new tax brackets for 2025 and 2026. Everybody gets to save some money because of these new changes. For some people, this will not mean much, but for some other low-income earners, this could easily mean more food on the table or the ability to save a little bit more for retirement. Next, we take a look at the basic personal amount, the BPA. The basic personal amount is a tax credit, but this is also the amount of income that you need to earn before you start paying any taxes at the federal level. So if your income is below this amount, you will be paying $0 in taxes at the federal level. For 2026, the BPA is $16,452. That is, if you earn below $181,400. However, if you earn more than $181,440, your own basic personal amount will be decreased to $14,829, which means you'll be getting a lower BPA if your income is above $181,440. Finally, we take a look at employment insurance. Here, the contribution rate has been decreased, but the amount of income that is insured for EI purposes has gone up. But the overall effect of this is that everybody now gets to pay a little bit more for EI. For 2026, the contribution rate for employers is now 2.28% or $2.28 for every $100 you earn. And then the contribution rate for employees is now 1.63% or $1.63 for every $100 you earn. The maximum annual insurable earnings will now be $68,900 compared to the $65,700 in 2025. If you look at this in actual numbers, the annual EI contribution for an employee will increase by about $45.59 maximum. And for employers, this amounts to an extra $63.83, which is not a lot of money. And the extra you get to pay will also vary for everybody depending on your income. Then, the other changes that some people should be paying attention to is 1. Childcare benefits. The amount that you'll be receiving in childcare benefits might go up in 2026. Also, if you are a personal support worker, there is a new tax credit that you can claim. And lastly, retirees who receive old age security benefits. If you earn above $95,353, you might have to be paying back some money to the government. And finally, if you found this video helpful, support me by hitting the like button, subscribe to the channel, and I will see you in my next video.